Broker's Guide, Practice Final Exam, Closing Statement Case Study. So here we go with another closing statement story. We're going to write down all the characters. Here's our storyline right here. And as we read the paragraph, we're going to write down the characters so we don't get lost and miss anybody in the story. The Coverdales are selling their homes, so Coverdales are the seller. To the Hanways, they're the buyer, for $398,000. So there's the purchase price. Purchase price starts with a P, goes on page 1. So $398,000 is a debt owed by the buyer to the seller, and that money will change hands, so that's a double entry. Debt to the buyer and credit to the seller. It's going to change hands at the closing. Alright, then the Hanways gave their broker a $10,000 good faith deposit. There's the deposit, $10,000. It goes as a credit to pay off the buyer's debt. So that's going to be on page 1 too, because it has something to do with the purchase price. The Hanways will finance the purchase with a 75% loan-to-value mortgage. So loan-to-value is 75% of $398,000 gives you a loan of $298,500. Now we got another piece of the story. The closing date is July 3rd, with the day of closing belong to the buyer. So July 3rd belongs to the buyer. That means the seller was in the house from January to July 2nd. So January, February, March, April, May, June, and 2 days in July gives 183 days to the seller. Subtract that from 365, gives 182 days to the buyer. That'll trick you. Okay, so then property taxes are $8,412. Property taxes, $8,412 divided by 365 days. They want every penny, so keep the factor in there and times it by the seller days, because the buyer's going to pay the property tax at the end of the year. The seller hasn't paid it yet, so it's a debt of $4,217.52 debt to the seller and credit to the buyer. Money's going to change hands at closing, so it's a double entry. And it also says association dues were $125 monthly. So let's write that down. Monthly dues, $125. We know it's for July. July has 31 days, so divide 125 divided by 31 times buyer days, because it was paid by the seller. If the seller paid it, the buyer owes the seller $116.94. So it's a debt to the buyer and a credit to the seller. That money is going to be paid at closing to the seller. The sellers will pay 7% brokerage fee. Brokerage fee 7% on the sales price. The seller's going to pay it is $27,860. Debt to the seller, it's only going to go from the seller to the brokerage. It doesn't go on the buyer's side. The buyer doesn't get that money. And the doc stamps on the deed and the title insurance. So doc stamps on the deed, $398,000 divided by 100 times 0.70 gives you $2,786. It's a debt to the seller, and it goes to the state, not to the buyer. And it also says that they got $2,200. They're going to pay $2,200 in title insurance. So we just wrote that down, $2,200 in title insurance. A debt owed by the seller goes out, doesn't get paid to the buyer at closing. The buyers will pay the appropriate state taxes on the note and the mortgage. So doc stamps on the note. The note's $298,500 divided by 100. Round up to the nearest stamp, and then times 0.35 is going to give $1,044.75. It's a debt owed by the buyer. It goes to the state. It does not go to the seller. Then we've got intangibles only on the new note. That is a new note, so 0.002 times the new note gives us intangible tax of $597. It's a debt to the buyer, goes to the state, does not go to the seller. And it also says that fees were paid, survey fee and recording fees, so we just totaled that up. Fees, $541, is owed by the buyer. It's an expense. These are expenses. They go on the second page. These are expenses. They go on the second page. Purchase price, property tax, prorates, and prepaids go on the first page. Page 1 gets the P's. So here we go. Number 93. How is the purchase price shown? There we are. A debit to the buyer of $398 and a credit to the seller of $398. So that would be C. 93, C. $398 credit seller, debit buyer, page 1. How is the new first mortgage shown? So we've already got the answer. $298,500 credit to the buyer. It's part of the purchase price, so that is page 1. So C, $398,000. I'm sorry, B, $298,500 credit buyer only, page 1. That is number 94, B, $298,500 credit buyer only, page 1. How is the brokerage fee handled? We've already got it. Brokerage fee was 7%. It was paid by the seller, $27,860. So number 95 is B, $27,860 is a debt owed by the seller only, and is on page 2. Expenses go on page 2. 96. How is the binder deposit shown? We've already got that answer. $10,000 credit to the buyer on page 1. So 96 is B, $10,000 credit buyer only, page 1. 97. How are the homeowner's fees prorated? So we know it's monthly. We know it's July. We've already got the answer. So $116.94 is a debt owed to the seller because the seller paid it in advance. So 97 is D, $116.94 debt to the buyer and credit to the seller. Page 1, it's a prorate. It's a prorate, so P's go on the first page. What is the proration for property taxes? We already figured that out. Got property taxes of $8,412 divided by 365 times your seller days, because your seller hasn't paid it. Your buyer's going to pay it at the end of the year. So question number 98 is B, $4,217.52 is a debt owed by the seller to the buyer. So it's a credit to the buyer and a debt to the seller, and it's going to be on page 1. It's a property tax, starts with a P. What are the documentary stamp taxes and intangible tax on the deed and the mortgage? So we already figured that one out. Doc stamps on the deed, there's the purchase price divided by 100 times 70. It's a debt owed by the seller, $2,786 debt to the seller. It goes to the state, doesn't go to the buyer. And then we've got our notes already figured out. There's the note of $298,000 divided by 100 times 0.35 is $1,044.75. Doc stamps on the note. It's a debt to the buyer, goes to the state, does not go to the seller. Intangible tax are only paid on a new mortgage, so there's a new mortgage. So intangible is $597. So you total these two up, and there's your doc stamps there. So we know that D is the answer. Debit seller, $2,786. Debt seller goes to the state. And debit buyer, total these two up, totals $1,641.75. And that goes to the state, does not go to the seller. And where are the totals of the buyer's and seller's expenses shown? The totals are shown on pages 1 and 2. C. Closing statements made easy.